The stock market was off to a sluggish start to this week with one exception. Let's bring in Brian Stutland, the founder of Equity Armor Investments. Brian, I did notice there was more trading in Bed Bath & Beyond on Tuesday than SPY, which tracks the S&P 500. That's hard to do. As a trader, what do you think when a single stock becomes hotter than the broader market?
Well, we've seen a lot of these frothy kind of names out there, the meme stocks, the crypto area, really take some wild swings, and it's been attracting investors both to play from the long and the short side. And as like these bubbles start to burst on some of these names, it really does get the activity and the volume going there as traders try and reposition or get out of what they once had in a very illiquid name such as Bed Bath & Beyond. So it's not surprising that we saw that last week, although a little bit surprising that it's even more than something like SPY and the S&P 500 ETF, because you would expect that volume to remain. But remember, we were heading into a 3-day weekend. So usually the broader indexes take a little bit of a pause, a little bit less volume, really getting to the end of the summer, ramping up into the fall. It's not unusual to see lower volume sort of hitting the S&P 500 area.
Are you seeing big money investors hedging in the market, buying put protection perhaps in the event that the stock market takes a big fall?
Yeah, yesterday, we came out of the gate of a 3-day weekend. And once the market opened yesterday, we really saw some decent amount of put buying going on to raise sort of elevated fear factor levels for people. The VIX is one of those indicators of what measures sort of, people like to say, fear in the market. And we've seen that continually make higher lows over the last few weeks and moving higher, meaning that people are willing to go out there and buy puts, buy insurance on their portfolio with some sort of expectations of a sell-off come later this fall. And so it does concern me a little because you're coupling that with higher interest rates that we saw yesterday, the 2-year really getting close to 3.5%, the 10-year rising back to levels it once was seen, getting closer to those levels in June. And so certainly there is a little bit of worry out there that we might lose some of the liquidity in this market over the next couple of months.
Thank you so much, Brian. Go to businessfirstam.com for where to see our show on TV.